And you're also an enrolled agent, Bill. Why did you take that level of...
Well, it's supposedly I've memorized the Internal Revenue Code, but you know what? I got bored after page 10,300.
Well, but you're the perfect person to be talking about. You call them tax dodges.
That sounds wicked, doesn't it?
I think perhaps tax, avoidance, tricks, legal tricks. And we're starting with owning a house, which is something I personally currently do not do. And I've been debating whether I should, because the U.S. does have this sweet deal for taxpayers where basically we get to deduct our mortgage interest. So
and you can't do that back in your native land of Canada.
Canada, no, we get it on the back end. We don't get the capital gains hit that you get here.
I see. So yes, it is special to be a homeowner in the United States. And by the way, deducting your mortgage interest isn't even the best deal. We have something else, and I think you also have it in Canada. We have something called imputed rent.
Is that, okay, so let me guess, that would be the amount I would have paid in rent?
Exactly. Yeah, that's the whole point. Listen, if let's just suppose that you buy a house for $400,000.
Mm-hmm.
And
Good
let's
luck.
just suppose
Good
you're
luck
rich.
with that.
Okay,
yep.
Well, that would get you an apartment in New York City, not even a studio. So let's just suppose you did, and let's suppose that you're rich and you paid cash, all right? There's no mortgage to deduct. You still get a terrific tax advantage. Let me explain how that works. Suppose that you would have spent $3,000 a month on rent for that same place.
Yeah.
And let's just suppose that now that you're a happy homeowner, you're spending $1,500 a month on maintenance and $500 a month on property tax. So you're shelling out $2,000 a month, but you would have rented for $3,000 a month. This is what's happening to you, Diane. You're getting a $1,000 a month dividend from you, the landlord, to you, the home dweller. $1,000 a month dividend, that's $12,000 a year. Now, do you pay tax on that? The answer is no. So that's what you're really missing out. It is not even the mortgage interest. It's just the fact that you're not paying any tax on that $1,000 a month of essentially a dividend. It's like owning a real estate investment trust, but if you own one of those things, it's all taxed to here and gone. But when you own the house, there's no tax.
So I recall as a homeowner that I would take the mortgage interest deduction. At what point would I have calculated something around imputed rent? How does that, besides going to an accountant saying, don't forget Bill Baldwin told me about this, how do you deduct that?
You don't deduct it. You just never report it.
Oh, okay.
So you're just getting this free rent. It's not income. Who, me? What income, you say to the IRS? That's the best thing about being a homeowner. And it's true whether or not you have a mortgage. Now, a mortgage is something separate. You can, if you do have a mortgage, you can deduct the interest. And as you were saying, that's not so easy to do in Canada. The next thing is that up to a point, and only up to a small point, you can deduct your property tax if you itemize your deductions. But the cap on that, it's a new cap, is $10,000 a year. You know, it doesn't go very far. And there are plenty of places in New York, definitely in New Jersey, where your property taxes could be easily more than $10,000 a year. You can only deduct 10. And by the way, that only applies if you itemize. And I don't itemize.
You don't itemize.
I take the standard deduction.
Because you end up in that place anyway?
Well, because I don't have a mortgage, and because if I did deduct my property tax, I could only deduct $10,000. So I just take the standard deduction, which, by the way, is a very big number. It's $27,700 for a couple this year. So you have to have a lot of mortgage, a lot of other deductions before that mortgage deduction really does anything for you. The big thing, though, is no matter where you are on the debt spectrum, you do or don't have a mortgage that is or isn't hard for you to pay back, you always get to ignore the fact that you're the landlord paying yourself rent by living there, and you don't pay income tax on that.